At the beginning of the program, we mentioned the changes being brought about by the Tax Reform Act of 1986. While it is not affecting your 1986 tax returns to any great extent, it will change the amount of money being withheld from your paychecks. And for those of you who pay estimated taxes, the rules have changed for that as well. Ron, what does the tax law change that makes it affect our withholding, and why could we not use the same form we did before?
Ed, I've been more than just a casual observer of this tax system of ours for more than 25 years now, and I think there's a couple of real good reasons for this new W-4 form. One is Congress is concerned that people are getting big refunds and they could use that money all year long. And the other is Internal Revenue's concerned that you may be way under withheld in taxes if you don't do something to adjust that W-4 form and get it corrected in line with the new tax bill. We took a serious look at whether the old W-4 form and its instructions could accommodate the new law's major changes that dropped the tax rates, hiked the standard deductions and personal exemptions, and made some major alterations in deductions and credits. In the computer testing of different wage earner scenarios, we quickly learned that for too many people, the old table simply would not work. We're not talking here about shades of difference either between two tax laws. The differences are real, and they add up to significant tax dollars. For example, every withholding allowance taxpayers claimed in 1986 was worth $1,080, and every withholding allowance they claim in 1987 will be worth $1,900. That's almost double the amount. And taxpayers who itemize their deductions and who claim extra allowances because of them are in the greatest risk of having too little tax withheld from their pay. They might be out of step with their real tax liability. Now, if those taxpayers simply claim in 1987 the same number of allowances they claimed in 1986, they could be seriously under-withheld for income tax purposes and might even be subject to some penalties when the year is over. We also can no longer afford to work with a W-4 form that doesn't account for second jobs, for working spouses, and non-wage income, such as interest and dividend income. And because of the size of the differences between rate brackets under the new law, especially when compared to the old law, if more than one income is involved, the amount of under-withholding that may result can be very substantial. The new W-4 worksheet and its instructions allow people to build these numbers into the tax calculations and for the very first time in a long time, personalize the withholding system. Taxpayers can actually plug in their own facts and come up with a bottom line that closely reflects their own personal situation.
So what you're saying, Ron, is no more hit or miss.
That's correct. No more hit or miss or by guess and by golly. The new W-4 provides an opportunity to withhold tax based on the individual's facts and the facts in their own individual lives. If you applied the old tables to your new tax circumstances, far too many of you would be seriously under-withheld for the year. The simpler form might have been more popular now, but the positive reception now would be short-lived. Indeed, come next January when you owe a big tax bill and perhaps even owe a penalty as well. So in drafting the W-4 form, there was a classic struggle between simplicity on the one hand and fairness, and between taking the easy way out and taking steps to ensure that the appropriate amount of tax is withheld from your pay. In the end, we really didn't have much choice at all. As a matter of fact, Congress specifically directed the IRS in the law to design a W-4 form so that withholding from taxpayers' wages approximates as closely as possible their real tax liability for the year. And going from 2 pages to 4 pages certainly added more complexity to the form. It's a more complex looking form, and the greater the likelihood of some public confusion, certainly. But in doing so, it also means that people's withholding will be reasonably close to the actual tax they owe for the year.
Ron, can you give us a couple of examples? What happens when you do fill out the new W-4 form? What happens when you don't?
A couple of examples might make it more clear. Let's suppose we have Robert and Mary Birch. One's age 53 and the other 47 years of age. His wages are $75,000 a year and hers $50,000. They have $5,000 in interest from a savings account, and their total itemized deductions are $15,000. Their business expenses $8,000 and capital gains of $7,500, a rather complex tax return. They file a joint return and they have no dependents. By submitting a new W-4 promptly and reducing their withholding allowances from 2 to 0, plus paying an additional $84.46 in taxes each payday, they can expect a refund next year of $460.50. If they take no action by October 1st and their employers automatically reduce their allowances as prescribed by the law, then they'll have a tax bill when the year is over of $5,582.45. In summary, they file new W-4s, they receive a refund of over $400, they do nothing, they wind up owing more than $5,500 in taxes, a hefty bill to say the least. In another example of John and Mary Green, who are married with 2 dependent children, let's suppose they file a joint return and John's salary is $25,000 per year, Mary doesn't work, and they have no other income, adjustments to income, itemized deductions, or credits. By filing a new W-4, John keeps his withholding allowances at 5. However, because each allowance is now worth $1,900 compared to the $1,080 in 1986, he'll receive no refund nor owe any tax for 1987. If he takes no action, he receives a refund of $213.75, but by filing a new W-4, John has the use of his money all year round, rather than having to wait for it in the form of a tax refund. The good news with respect to the new W-4 form is that many taxpayers will have to calculate the first 5 lines of the worksheet and they're finished with it. I like to say if you have a simple tax return, you'll have a simple W-4. Certainly 1040-EZ filers, but many 1040-A filers will only have one income and they have a very simple W-4 form to file. Also, we're advising working spouses, if they're the lower paid spouse, to simply claim 0 withholding allowances and put all the computation on the other spouse's W-4. So what could be more simple than simply claim 0 and turn the form into your employer? After you submit your new W-4 and see the changes reflected in your paycheck, then you should check the figures to make sure that your withholding will cover your liability for the year. And to help you, you can use the handy order blank in the tax package and order our free publication number 919, which will tell you whether your withholding is correct for the year.
Well, on that point, Ron, I understand that you are providing a lot of information to help people in figuring out their new withholding.
Well, in addition to the normal channels of information from the Internal Revenue Service, which you've already discussed on the program here, we do have a special videotape that provides step-by-step instructions. It's available in both English and Spanish. And we also now have an audio tape for libraries. It's available in English only, and that also will give you step-by-step instructions in how to prepare the new W-4. These tapes are also available in many libraries, as I said, and in video stores, and from IRS offices all over the country.
Thank you, Ron. Thank you very much. Marcia, your turn now. What is the deadline for submitting a new W-4?
Well, the deadline for submitting a new W-4 isn't until October 1st, 1987. But I would advise people to take care of it right away, because the new law may significantly change the amount of tax you will owe for 1987. If you don't do it, then your employer will have to ignore any previous forms you have filed, and the amount withheld will probably not be correct for your situation.
Are the penalties pretty stiff if that happens?
Well, if you want to pay your taxes by $500 or more, there could be a penalty. You can avoid this penalty if you're withholding, plus your estimated tax payments in 1987 equal at least 90% of the tax you owe for 1987, or 100% of your tax liability for 1986.
Thank you, Marcia. We're getting many questions about the W-4, so let's try to get some of them answered. Lorenzo, the first one to you. This man says, since the first of the year, my take-home pay has increased, and I know it's because of the new tax bill. It's happened before with other tax cuts. Why do I need to file a new W-4, he asks, when I did not have to other times the tax rates were reduced?
Well, the reason is because there have been so many changes to the tax rates and deductions for this year that the allowances that you took for last year may not be applicable for this year. And this is a reason for the filing of the new W-4 form.
Susan, this is from someone who says that she owns a small company with about 30 employees, some of whom have been asking her questions about the new W-4 that she cannot answer. She wants to know who in the IRS should she refer them to.
Ed, the IRS has a special program called Outreach. This is one of our taxpayer education programs.
Yeah, I just cut into I want to be sure I heard this right. It's outreach, it's not outrage?
It is outreach.
Outreach, okay.
Through the Outreach program, IRS speakers go to community groups and to businesses to conduct workshops and seminars. If this caller would like to arrange for an IRS speaker to come to her company, she can contact her local taxpayer education coordinator by calling the IRS tax assistance number in the telephone directory.
Susan, does the new tax law allow students or other people to be exempt from income tax withholding?
Yes, it does, but the requirements are a little bit more strict than they have been in the past. In order to claim exemption from withholding, you cannot have owed any tax for 1986, nor expect to owe any tax in 1987. If you can be claimed as a dependent on another person's return, and you have unearned income, such as interest, and the total of the unearned income plus your wages is expected to be more than $500, you will have a tax liability in 1987. You should check the W-4 form instructions to be sure who can claim exemption from withholding. I might also add that if you do claim exemption from withholding, your W-4 form will remain in effect until February 15th of 1988. At that time, you will have to review your situation and file another W-4 form.
Where can I get further information on withholding? That's for you, Lorenzo.
Okay, the best place to look is on the W-4 itself. Check the information that is attached to the W-4. If that information is not good enough, then you can get additional information from publication 919, which is my withholding correct, and also publication 505, which is tax withholding and estimated taxes. And you can also get these forms by calling the toll-free number, which is located on your tax package.
Thank you both. You've been extremely helpful. That brings us to those who are self-employed and who pay estimated taxes, and it takes us back to Marcia.
Right. What's different this year is that you have to pay in 90% of your tax liability through estimated tax payments and in withholdings, if applicable, instead of the 80%. Estimated payments are made quarterly, and each quarterly payment must at least be 22.5% of your tax liability for the year.
Thank you, Marcia. We're now getting ready to take a closer look at preparing to pay 1987 taxes. I emphasize 1987. And we have with us Gary Davis, who's a tax partner in the Pittsburgh office of Pete Warwick. Mr. Davis, we have before us some pretty sizable changes. As we look to 1987 taxes, what should we take care of immediately?
Well, one of the things that's going to affect most viewers, or a lot of viewers, Ed, is that unlike 1986 and earlier years where you listed your dependents, you were not required to put Social Security numbers or taxpayer ID numbers. Going ahead, beginning in 1987, dependents age 5 and older will now have to be listed with a Social Security number. So that is a change that will require some action by viewers. I guess the recommended course of action would be to contact a local Social Security Administration office to get the Form SS5 to get that Social Security.
What about changes in itemized deductions in 1987?
Well, itemized deductions in 1987 have changed in several areas. In the medical area, it now requires at least 7.5% of your medical deductions must now exceed 7.5% of adjusted gross income before you're entitled to a deduction. That's up from 5%. In the tax area, generally taxpayers were not losers under the 1986 Tax Reform Act. The only thing that was wiped out was the sales tax, as many auto dealers remind us. In the interest area...
Sales tax was wiped out as a deduction.
That's right, as a deduction in 1987. It was still good in 86, but in 1987 it was no longer deductible. In 1987 also, in the interest area, we have a phase out of personal interest. That's the interest, for example, in credit cards, for automobile loans, etc. The good news is we are still entitled to deduct interest tied to your principal residence and also a second residence. So what we now see in the local interest markets is a big shift or a big restructuring of debt. There are some special limitations that apply to taxpayers. They have to be mindful that they can only have debt secured by the cost of their property plus some improvements. There are some exceptions, but we will see a lot of movement in that area. The final thing that I'd point out is in the miscellaneous deductions area. That's things like union dues, tax preparation fees, some unemployed, or some unreimbursed, rather, business expenses. Those now have a floor also. Those are now only deductible in 1987 to the extent they exceed 2% of adjusted gross income. So that is quickly a very quick summary of the major changes in itemized deductions.
Well, what about major changes in capital gains treatment?
Capital gains, I'm seeing some confusion. As you know, that after 1986, the capital gain exclusion, the 60% exclusion, was phased out. Going into 1987, we now have a tax, the capital gains go in with your ordinary income. However, there's an overall limitation. The maximum rate on capital gains, long-term capital gains, cannot exceed 28%. The planning point, or the point I'd like to mention here, is that even though the rates in 1987 go to 38.5%, taxpayers and investors need to realize that the holding period, that is, holding the capital asset in excess of 6 months, is still important in order to get the 28% rate.
Have you found any other areas, Mr. Davis, in which there is confusion, or will be?
Yes, beginning in 1987, we have a new computation for children under age 14. It's nicknamed the kiddie tax.
Mm-hmm.
And the way it works is that to the extent you have a child with passive income, that's income from things like dividends, interest, etc., passive nature, possibly some of that could get taxed at the parent's rate. Let's take an example. Let's say a couple has a youngster that they've shifted some stocks to previous to 1987, and those stocks and investments are generating some passive income, and the child has taxable income from these types of investments of $1,500. $500 of that taxable income would in effect get added to the parent's taxable income calculation. The tax would be calculated. That incremental tax would then be added to the child's tax return, and that is the child's tax for 1987. A very complicated provision, and I'm sure causing some confusion.
Thank you very much, Mr. Davis. And our thanks to all the experts, private and governmental, who've joined us here today. We hope that you found the last 2 hours enjoyable and useful. Now, as we leave, one last word from our tax family.
All you have to do is sign the return. Oh, both of you.
Okay. Right there. Yeah.
Put on the peel-off label.
All right.
It's easier if you use the pre-addressed IRS envelope. Enclose your W-2s and schedules.
Okay, here you go, dear.
All right.
And be sure to put on the right postage. And you're done.
Wow, that was easy. Nice refund, huh?
And we'll need it.
Hey, honey, by the way, what was it that was so important you wanted to tell me?
Oh, nothing much. Just that we're going to have another baby.
That's eight!
Congratulations.
Eight exemptions! Oh, that's great!